Do you want to be the next Warren Buffett? Or for the matter of fancy, can we say, who among you wants to hail up to the position of the big shots and top investors like him? Well, if you fantasize about that, then this is your go-to video. Well, we have made this video meticulously by combining the portfolios of some of the top-notch investors. Welcome to Fix Your Finances, Build Financial Wealth. If you want to build your financial wealth and fill your mind with the right information, make sure to hit the like button and subscribe for us to provide you with more valuable content. All of us can't seem to stop wondering about how the statistics and portfolios of the top-notch investors look like. And some of us are also tenaciously looking at them and that opportunity when they would leak their strategies so that we can pick that up and advance our investment profiles, right? So here we have brought to you that with all of these elements combined. And without further ado, let's get straight into it. First off, we have Warren Buffett. Warren Buffett is undeniably the most closely watched, highest profile investor in modern history. After all, no one boasts a superior track record of outperforming the S&P 500 index. Despite his unparalleled success, Buffett's investment model has always been transparent, straightforward, and consistent. Fundamentally, he invests in fairly priced, high dividend-paying, blue-chip companies that feature strong balance sheets. Buffett buys such stocks with the intent to hang on to them over the long haul. So come on now, let's look into his portfolio. Comprising 49.1% of the Berkshire Hathaway portfolio, Apple Inc. represents Buffett's largest holding. Berkshire Hathaway owns approximately 1 billion shares in the tech giant, worth $109.3 billion at the time of this reporting. With 1.03 billion shares to his name, Buffett's second largest holding is in Bank of America Corporation, valued at $24.1 billion and comprising of 10.8% of his portfolio as of August 4, 2020. Buffett's interest in this company began in 2011 when he helped solidify the firm's finances following the 2008 economic collapse. Buffett once claimed to consume at least 5 cans of Coca-Cola per day, which may explain why the Coca-Cola Company stock is his third largest holding. But one thing is for certain, Buffett appreciates the durability of the company's core product, which has remained virtually unchanged over time, with the exception of the ill-fated New Coke formula rebranding in the mid-1980s. This makes sense, given that Buffett started buying Coca-Cola shares in the late 1980s following the stock market crash of 1987. As of September 23, 2020, with 400 million shares valued at approximately $19.2 billion, Coca-Cola accounts for 8.6% of the Berkshire Hathaway portfolio. American Express occupies 6.5% of the portfolio. Berkshire Hathaway holds 151.6 million shares, valued at $14.4 billion as of September 23, 2020. On February 14, 2013, Berkshire Hathaway and 3G Capital announced a $28 billion deal to acquire global food brand H.J. Heinz Company. 2 years later, the company merged with Kraft to become the Kraft Heinz Company. In the years following the merger, the company has seen some rocky times, with share prices plummeting from a high of $96.65 in February 2017 to $19.99 in March 2020. The next top investor that we have is Peter Lynch. Peter Lynch's approach is strictly bottom-up, with the selection from among companies with which the investor is familiar. Then, through fundamental analysis that emphasizes a thorough understanding of the company, its prospects, its competitive environment, and whether it can be purchased at a reasonable price. His basic strategy is detailed in his best-selling book, One Up on Wall Street, which provides individual investors with numerous guidelines for adapting and implementing his approach. Lynch once conducted a study to determine whether market timing was an effective strategy. According to the results of the study, if an investor had invested $1,000 a year on the absolute high day of the year for 30 years from 1965 to 1995, that investor would have earned a compound return of 10.6% for the 30-year period. If another investor also invests $1,000 a day every year for the same period on the lowest day of the year, this investor would earn an 11.7% compounded return over the 30-year period. Lynch coined the term 10-bagger to describe a stock that goes up in value tenfold or 1,000%. These are the stocks that he was looking for when running the Magellan Fund. Rule number 1 to finding a 10-bagger is not selling the stock when it has gone up 40% or even 100%. Many fund managers these days look to trim or sell their winning stocks while adding to their losing positions. Peter Lynch felt that this amounted to pulling the flowers and watering the weeds. Even though he ran the risk of over-diversifying his fund, Peter Lynch's performance and stock-picking ability stands for itself. He became a master at studying his environment and understanding the world both as it is and how it might be in the future. If you don't feel comfortable making a risky leap with your money, follow the Peter Lynch investing strategy and pick a stock with these characteristics. It's in a predictable industry that won't change or attract rapid competition. It is growing its earnings at a sustainable level 10% to 25%. It has a niche and delighted customers. It is under the radar. You won't hear many analysts bragging about it. A great example of a stock that fits the bill is Advance Auto Parts, an aftermarket automotive parts provider. The firm flew under the radar of Wall Street analysts for years. It's been in a sneaky growth industry as many Americans drive older cars and have a need to buy parts to fix them up, so it has dominated that industry. Most importantly, its industry hasn't experienced significant headwinds, so earnings have been easier to predict. It has a trailing 12-month PE of 24.76 as of January 21. Next up, we have the investment portfolio of the successful George Soros. Now, let's look into the ongoing analysis of the changes made to George Soros's 13F stock portfolio on a quarterly basis. It is based on George Soros's regulatory 13F form filed on 11/13/2020. Soros Fund Management invests globally, and the long positions in the US market reported in the 13F filings represent 20% of the overall portfolio. The 13F portfolio value decreased 10% this quarter from $4.48 billion to $4.08 billion. The number of positions decreased from 141 to 132. Very small stock positions and large debt holdings together account for 20% of the 13F holdings. The investments are diversified with a large number of very small equity positions, a small number of large equity positions, and a few large debt holdings. The focus of this article is on the larger equity positions. The top 3 individual stocks held are Liberty Broadband, D.R. Horton, and Palantir Technologies. To learn about Soros' distinct trading style and philosophy, check out his The Alchemy of Finance and other works. This is how Soros' portfolio looks in a nutshell. Soros' 13F portfolio value decreased from $4.48 billion to $4.08 billion this quarter. The number of positions decreased from 141 to 132. Soros added Palantir Technologies and Unity Software while reducing T-Mobile US. Also, most of their recent additions and financials were either reduced or eliminated during the quarter. Liberty Broadband, at 19% of the portfolio, is by far the largest position. In an interview in August, Soros tersely explained his trading philosophy and market edge as taking advantage of the following. A. Fallibility. In situations that have thinking participants, the participant's view of the world is always incomplete and distorted. And B. Reflexivity. The distorted views can influence the situation to which they relate, and it leads to inappropriate actions. He also believes the edge is now gone, as the information was made public in his book. And finally, we have got Bill Gates' investment portfolio. The media company is the 15th largest stock holding of Bill Gates' stock portfolio, accounting for 0.47% of the portfolio. Shares of Grupo Televisa have been underperforming over the past 5 years due to changing market trends. Its shares are down almost 70% in the last 10 years. Year-over-year drop in revenues have negatively impacted its share price performance in the past years. The portfolio manager has created a stake in Alibaba during the first quarter of 2020. The trust has bought 552,383 shares valued at $162 million, accounting for 74% of the overall portfolio. The world's largest e-commerce platform, Amazon, is the 13th largest stock holding of Bill and Melinda Gates Foundation. The trust has created a stake in Amazon by purchasing 60,460 shares valued at $190 million. Apple stock holdings account for 1.05% of the overall portfolio valued at $232 million. Shares of Apple soared almost 70% this year. In addition to share price gains, Apple offers hefty dividends to investors. Coca-Cola FEMSA currently holds 6.2 million shares valued at $253 million, accounting for 1.15% of the overall portfolio. Bill Gates' stock portfolio manager first bought United Parcel Service in 2004. The trust has benefited from its investment both in the form of share price gains and dividends. Shares of United Parcel Service jumped 140% in the last 10 years. At the end of the third quarter, a total of 57 of the hedge funds tracked by Insider Monkey were bullish on this stock, a change of 54% from one quarter earlier. With various others being FedEx Corporation, Ecolab Inc., Crown Castle International Corp. In order to generate a sustainable source of money, Bill and Melinda Gates Foundation Trust started investing money in companies that have a long history of returning cash to investors in the form of dividends and steady share price gains. The world's renowned investor Warren Buffett is the trustee of Gates Foundation, and he has pledged the majority of his fortune to the Bill and Melinda Gates Foundation Trust. Type success in the comments section if you are motivated, and make sure to subscribe and follow us on Instagram at fixyourfinances_. See you next time at Fix Your Finances. Well folks, with all that Big Shots portfolios covered, we have to come to the end of this video. Take care and toodles!